Hi everyone, I welcome you all to exclusive webinar on Input Service Distributor addressing practical implementation challenges conducted on behalf of KSCAA. It's my privilege that we have Kuber sir today with us who will be sharing his insightful discussion on this. I request Sachin to give a short intro about sir and then we can take it forward.
Thank you, Rahul. Good evening, everyone. Welcome, Kuber sir. Kuber sir is a chartered accountant who has 15 years of expertise in indirect taxation. He is well versed in the areas of consultancy in indirect taxation, planning, representation before authorities and appellate authorities, with special focus on GST. We are very happy to have you here, sir. We are looking forward for the webinar. Thank you for joining us, everyone.
Good evening, everyone. At the outset, I extend my deep sense of gratitude to my Guru Shri S. Venkatramani. I extend my thanks to Karnataka State Chartered Accountants Association for giving me this opportunity to share my views on Input Service Distributor, practical implementation and challenges. Friends, we all know that goods and services tax law is evolving and we are seeing many amendments to the Act, rules, there are new notifications, there are amendment to notifications, there are new circulars, there are instructions, there are FAQs which are being issued by the board, and all these amendments are taking place on routine basis. Such amendments are increasing the compliance burden on the registered persons. These amendments are insisting the registered persons to revisit the tax positions that they have taken at the time of implementation of GST back in July 2017. Importantly, ITC provisions under GST laws have underwent amendments numerous times. Each time there is an amendment to the ITC provisions, there is this question which arises whether now ITC which was eligible is now ineligible, or ineligible ITC can become eligible. It may not happen that way, but yeah, allowability and disallowability in the course of adjudication and audit, all these issues are arising and there are disputes that are arising between the registered persons and the tax office. So these disputes are going into litigation and we are not seeing settlement or relief at the appellate authority stage also. One such amendment relates to ISD provisions with effect from 1st April 2025. So Input Service Distributor was there as a part of statute since July 2017, and the input service, the said provisions of Input Service Distributor has is now amended by Finance Act 2024, and such provisions amended by Finance Act 2024 are effectively applicable from 1st April 2025. So there is this one understanding that, okay, Input Service distribution mechanism is mandatorily to be followed by all the registered persons having distinct persons in various states spread across the country. So whether ISD provision was mandatory now or it was mandatory then, or whether we can take a view that ISD is still an optional as on today. If we look back in the context of ISD, we have pre-amended provision, we have Circular 199, we have Circular 210, we have Rule 28, we have so many other provisions, including Schedule 1 and cross-charge concept, what most of the registered persons were following so far. So all those provisions and all these circulars we will discuss today to understand whether Input Service Distributor is a compulsory provision that needs to be followed by all the registered persons or not. Friends, we have seen that the GST was implemented with the core objective of seamless flow of input tax credit. The seamless flow of input tax credit, while it is a core objective, we are seeing so many challenges in claiming the input tax credit and also utilizing such input tax credit. Now there is a bridge between the supplier and the recipient. Now that bridge is Input Service Distributor. So Input Service Distributor is only a mechanism. So while this was a core objective, seamless flow of input tax credit, and GST being destination-based consumption taxation system, it itself means that taxes should follow the consumption. So it is the location of the person who is consuming the services, goods and services, would be the state which will be receiving the taxes from the supplier. A unit in a state which receives tax invoices cannot claim. Rahul, I'm sorry, I am not able to move my PPT. Yeah, now I think yes. A unit in a state which receives tax invoice cannot claim and retain the input tax credit in case of centralized procurement. If we follow this principle of GST being destination-based consumption taxation system. So therefore, the taxes should follow the consumption, and it is the state which will consume these services or which will consume these goods is entitled for such taxes. And we are also seeing it again, another reason that states are demanding their share of taxes on consumption of taxable supplies that are taking place in their state. As such, there is an interpretation which says that, okay, ISD is applicable and it is mandatory with effect from 1st April 2025. Now, registered persons has to factually identify the distinct persons, factually identify the services consumed by the distinct persons, and that services consumption by the distinct persons should be under self-assessment basis to apply the ISD mechanism, if at all they choose to distribute the input tax credit to the distinct persons. Whether it is mandatory or optional, we will discuss that in the ensuing slides. But yeah, this is the brief background about the today's topic. Before we jump into the topic of input service distributor, whether it is mandatory, whether the registered person having distinct persons or branches located in various states is liable to obtain registration or not, there is an exercise that every registered person need to carry to check whether input service distributor registration is applicable to his business or not. So it is recommended that every registered person who has branches in other states should identify the common credits, should identify the common inward supplies, should identify the common input services, and come to a conclusion that, okay, these are the common which will be used by the head office and also the branch office, the head office and few of the branch office, the head office and one of the branch offices. There can number of distinct persons, number of branches, we will have a number of statements or lists of common input services and common inward supplies, giving up the details of common input tax credit. This exercise as a step number 1 can be carried out to see whether there exists any common inward supplies and whether there exists any common input tax credit. Once they identify this list, so it is recommended to see whether the services which are being consumed by the branches and the invoices which are being received by the head office, can we eliminate this? In the sense, instead of head office receiving the invoices, if the supplier can issue the invoices on the branch office or which is consuming the services, then it is recommended to revisit the contractual terms and rewrite the contract to identify the place of supply and the value of supply that each of the branches located in different states or within the same states would be consuming. As a step number 3, now the tax paid on reverse charge basis is also subject matter of distribution of tax by ISD. So when there is a distribution of tax, input tax credit of tax paid on RCM basis, then a registered person need to check the inward supplies to eliminate if incoming invoices from RCM liability can be avoided, and the respective branch offices can pay the tax on reverse charge basis and claim the input tax credit instead of passing it through input service distribution mechanism. After step 1, 2, and 3, what you can see on the screen, the next step is to review the revised common credits after step 1, 2, 3. If these common credits are material and substantial, then such registered person can consider obtaining ISD registration, considering the fact that the registration as ISD also involves compliance cost. If the balance input tax credit is very meager or not that material or not that substantial, registered person may choose to forfeit the input tax credits. So this is the preparedness for the purpose of obtaining input service distributor, and all the inward supplies received by the head office needs to be reviewed in this manner and to see whether there arises a requirement to take the input service distributor registration to, and there arises a requirement to distribute the input tax credit or not. So finally, if there are substantial credits which input tax credit which the head office is receiving with respect to the services consumed by the branch office, then they may consider obtaining the registration as ISD. So input service distributor is defined under section 2 subsection 61. So the definition says input service distributor means an office of the supplier of goods or services or both, which receives tax invoices towards the receipt of input services, including invoices in respect of inward supplies which are liable to tax on reverse charge basis under CGST and under IGST for or on behalf of distinct persons referred to in section 25 and liable to distribute the input tax credit in respect to such invoices in the manner provided in section 20. Friends, looking at the definition of input service distributor, it is very clear, and everybody by this time would be knowing that, okay, this is only an office and there is no a physical office that is required for ISD distribution. And that office will only receive the tax invoices towards the receipt of input services by the branch office. When anybody looks at this definition, there arises many questions as to whether is it possible, whether a head office can receive the tax invoices with respect to the services received by the branch offices is the question. Is that possible under the law? Is that a valid tax invoice? Whether the tax that has been mentioned on that invoice can be claimed as input tax credit is the question. Because after all, there are conditions in claiming the input tax credit. Section 6(2)(b) specifies that, okay, for a registered person to claim the input tax credit, such person should receive the services, only then he can claim the input tax credit. Supply is arising out of a valid contract. Everybody knows that, and without a contract, there cannot be a supply. And the contractual terms between the supplier and the recipient will decide what category of supply what category of services need to be supplied, where such supplies needs to be effected, who will be consuming the supplies, what is the value of supply, what is the timing, what is the milestones, and what are all other conditions based on which the supplier has to effect the supply. It may be noted that it is the supplier who will decide what is the place of supply. It is the supplier who will be issuing the tax invoice, and the tax invoice should categorically indicate who is the where the supply is being effected, including the state code. So it is mandatory for the supplier to decide the place of supply with respect to each of the supplies, and then decide what is the place of supply in case of services. So therefore, the contractual terms agreed between the supplier and the recipient will become crucial. Now, whether the contractual terms should also discuss about the place of supply and value of supply will be the question. With respect to this question, I would invite the attention of the members to the IGST rules 2017. We have IGST Act, we have section 12, we have section 13, we have IGST rules. Section 12, section 13 specifies place of supply with respect to each of the supplies or the categories of supply as mentioned in section 12 and 13 and IGST rules. What is the importance of IGST rules? If we peruse the IGST rules, if we read the IGST rules have been specified to identify the place of supply. And the burden is casted on the supplier to identify the place of supply with respect to each of the supply. It is not only the place of supply, it is also the value of supply that needs to be identified in terms of the contract agreed between the supplier and the recipient. In terms of the contract agreed between the supplier and the recipient. So IGST rules are specifying the rules to identify the place of supply with respect to each of the supply, and the obligation is casted on the supplier. So it is not the choice of the recipient of services to give the direction to the supplier to issue the tax invoice on 29 and supply the goods to 33. So that is not possible, is what the meaning that would come out of this reading. Friends, if you go to the IGST rules and if you see and meticulously read that, you will appreciate the way the IGST rules have been specified. Each of the rules refers to one particular terminology. So what does the terminology says? IGST rules identify the place of supply. That place of supply when the supplier is providing services to branches or the registered persons located in different states of a same entity. So there is a recipient who has places of business in different states, then the supplier is under an obligation to decide the place of supply. Place of supply becomes very much relevant when it comes to the in the context of ISD, because not all the credits that the ISD will receive will be subject matter of distribution, for the very simple reason that place of supply will decide who is consuming the services, who is that, and which is that registered person or distinct person which will be consuming this particular services. So if you go back to the IGST rules, meticulously it uses in the absence of any contract or agreement between the supplier of service and recipient of service. So the law is assuming that there should be a contract, and that contract should specify what is the value of supply and what is the place of supply. So the law expects the supplier and the recipient to agree on the category of supply, to agree on the value of supply, to agree on the place who will be place at which the services will be consumed under the valid contract. So in the absence of any contract or agreement between the supplier of service and recipient of service, IGST rules specify the mechanism to be followed to determine the value with respect to each of the place of supply. It is very interesting. Once you read the IGST rules, you will find it so interesting that the law has not left a single scope, or has not given even single scope, has not left any single scope to identify the value of supply with respect to each of the place of supply. Just to give you few of the illustrations what IGST rules, I am sure it is for the benefit of the members, just to give certain illustrations. It talks about advertisement services. Of course, the advertisement services as specified under IGST rules is applicable only if the supplier is supplying these advertisement services to central government. But interestingly, how the rules are specifying the supplier to identify the place of supply is very interesting. It says if the advertisement services are supplied, by giving an ad on the trains which will run between different stations, then the length of the track of that train should be considered in each of the state, and that ratio should be taken to decide the value and place of supply, and accordingly the supplier has to issue the tax invoice. In case of advertisement by way of internet, then it is the IGST rule specifies that it is the internet subscribers, on the basis of the internet subscribers in each of the state as published by Telecom Regulatory Authority of India should be considered for the purpose of deciding value and place of supply. In case of accommodation services, it says it should be decided on the basis of number of nights stayed in such property. There can be a contract. Consider this advertisement only. Consider this advertisement. Head office located in Bangalore, having multiple places of business in different states, may receive the advertisement services. While IGST rules are applicable only in case the supplier of services is supplying advertisement services to the central government and state government, but the law expects in supply of advertisement services, or for that matter, any other services, the law expects that there should be a clear contract which should which should clearly specify and state that what is the value and what is the place of supply, who will be the recipient, which will be the state which will be consuming this particular services. Unless the contract is specifying these value and place of supply, then there arises no question of receipt of tax invoices by the ISD, and there arises no question of input service distributor. Now, what is the input service distributor? What is the input service distributor definition specifies is the recipient is the registered person is receiving tax invoices, head office is receiving tax invoices, input services are received by the branch offices. How can there be a situation is a question. When a contract itself specifies all these requirements under the law, then there arises no requirement of ISD. There arises no requirement of ISD. So therefore, one has to consider the importance of the contract, and therefore, according to my view, in my considered opinion, it is the contract between the supplier and the recipient which will decide the place of supply, which will decide the state which is consuming this supply of services, and accordingly, the supplier has to issue the invoice. In this backdrop, if we go back and reread this input service distributor definition, how can a supplier issue tax invoices? How can a supplier issue tax invoices with respect to the services supplied to the branch offices located in other states? So there are issues. That means there are contracts between. I'm not saying for the moment here that there are no contracts, and I'm not saying that okay, tax invoices are being issued for supply without a contract. There can be a contract, but the contracts can be silent on this. When the contract is silent, there may arise a situation of getting the invoice by the head office and the suppliers rendering this service or supplying the services to the branch office. But in any case, the contract between the supplier and the recipient should clearly specify and state what is the value and what is the value for each of the place of supply, and accordingly, the supplier has to issue tax invoices. It is no business of the recipient asking his supplier to issue the head office, asking his supplier to issue the tax invoice on the head office and claim the input tax credit. Those are all the contractual obligations. Under a valid contract, the tax invoice will be issued, and under a valid contract, those tax invoices will be issued, and the recipient should have to claim input tax credit accordingly. If you look at this definition, they are not using this particular phrase of place of supply. They are not even talking about what is the place of supply and why this, how can there be a situation that tax invoice is coming to 29, whereas the services are supplied to 33. So, but when we read different provisions of the law, we should read harmoniously so that they should not be in conflict with other provisions. And when we peruse section 12 and section 13, there cannot be a situation that would arise that the supplier will be supplying services to branch office and issuing the tax invoices to the head office. This is one particular issue to consider. Does this mean that there is no possibility to effect the supply of service in one state and issue the tax invoice to centralized office located in another state? Friends, in this backdrop, the attention is also invited to explanation to section 16(2)(b). Section 16(2)(b), which clearly specifies that the registered person has to receive the services, only then he can claim the input tax credit. The explanation to section 16(2)(b), deems that even if there is a supply that is taking place, and even if the supply received by a third party on the direction of the registered person, it is deemed that such registered person has received the input tax credit and he can claim input tax credit. when we read section 16(2)(b) and issuance of invoice to one state while supplying services to another state, this could be one case involving bill to ship to mechanism for services, and bill to ship to mechanism for services is permissible. One may refer the provisions as specified under section 7 read with para 2 of schedule 1. Therefore, before I move on to this next slide, therefore, determination of place of supply is very crucial, and it is the obligation casted on the supplier, who on the basis of the contract or agreement determines the value and place of supply, and there can be bill to ship to. In case of bill to ship to invoices, the person who receives the tax invoice has to close the loop by issuing another invoice to distinct person, and that's how the cross charging happens, and the tax with respect to that particular inward supply stands transferred to the consuming state. This is about tax invoice and place of supply, which are crucial in identifying the applicability of input service distributor. Now there is an interpretation. That liable to distribute the input tax credit. This provision has come into effect from 1st April 2025. Now the reading is liable to distribute the input tax credit is mandating the registered persons to obtain the input service distributor registration and distribute the input tax credit. Friends, liable to distribute the input tax credit, what is used in the definition, has no connection with the provision becoming effective and cannot be read as mandatorily to be followed with effect from 1st April 2025. Liable to distribute the input tax credit is the scenario where the input tax credit, irrespective of the place of supply, irrespective of the contractual obligations, what we discussed, if we have to harmoniously interpret this particular provision, liable to distribute the input tax credit is referring to a scenario where the input tax credit is received by the head office and the said head office is not receiving the services and it is received by the branch office. So this is the definition, and this is the issues arising out of input service distributor, and accordingly, I would say that the place of supply, supplier will decide, and it is not the recipient who can give the direction to the supplier to issue the tax invoice on one branch and receive the tax services on another branch. Moving on to a few other provisions. We all know compulsory registration for ISD, whether or not separately registered, he has to obtain ISD registration. Separate registration of a person in whether in one state or different state, distinct persons. So if both the distinct persons are located in separately registered in the same state, distinct persons, I think we all know about that. Separate application 36(1) input tax credit shall be availed on the basis of the invoice issued by ISD. Section 20 specifies the provisions relating to manner of distribution of. We discussed about input service distributor definition. 21 specifies the manner in which the credit can be distributed by the ISD. Any office of the supplier of goods or services or both, which receives tax invoice towards the receipt of input services, including invoices in respect of 9394 and 5453, for or on behalf of the distinct person referred to in section 25, shall be required to be registered as ISD under 24(8) and shall distribute the input tax rate in respect of such invoices. So this is the provision which is again applicable with effect from 1st April 2025. So this is applicable when the services are received by branches and the head office is receiving the tax invoices. Head office has to obtain the registration as ISD. Subsection 2 provides the mechanism to distribute. Friends, subsection 2 of section 20 is the enabling provision which was not the part of statute prior to amendment. If you go back and refer circular number 199, it clearly states that, okay, cross charge or ISD is optional, and the head office may either choose to cross charge or may choose to distribute the credit by way of ISD. In the said paragraph, in the paragraph 1, they have said that there are no provisions which enable the transfer of credit by the registered person to ISD. So now subsection 2 has been incorporated to enable. It is an enabling provision. It is enabling provision where the distinct person can transfer the credit of central tax or integrated tax of tax paid on reverse charge basis to the ISD, and ISD can in turn distribute such credit to the relevant branch offices. So subsection 2 is an enabling provision. Subsection 3 specifies that the credit of central tax shall be distributed as central tax or integrated tax, and integrated tax as integrated tax or central tax. So if we refer to subsection 3, it is giving an option to the ISD to distribute the central tax as central tax or integrated tax as integrated tax or central tax. But when we refer to Rule 39, it says that IGST has to be transferred as IGST and C&S has to be transferred as C&S. So now there is a conflict between the rules and also the Act. So in case of conflict, we all know that interpretation of statute specifies that, okay, Act will be supreme and rules should serve the purpose with which the provisions in the Acts, provisions have been specified in the Act. Considering that aspect, a view can be taken that, okay, ISD can distribute central tax as central tax or integrated tax as integrated tax or central tax. But of course, we may have certain issues with respect to taking the input tax credit and distributing the input tax credit. It all depends on the portal mechanism. It all depends on 6A, 6 and all the returns that has been specified. So if central tax can be distributed as central tax or integrated tax, then it is as per the provisions. If it is not possible, then it is a portal law. Then there is an issue. So this conflict is existing as on date between the Act and rules. Manner of recovery of credit distributed in excess. Section 21 specifies that excess credit distributed by ISD shall be recovered from the recipient along with interest. When we peruse this provision, it is casting and it is specifying that excess credit, if it stands distributed by ISD cannot be held as liable for such excess distribution. It is only the recipient who will be liable to pay such claim of excess input tax credit. Branch office which claims excess input tax credit, how the assessing authority, how the proper officer will determine whether this claim of input tax credit distributed by the ISD is in excess or not, we have to see. Because it is what ISD distributes as input tax credit, that amount of input tax credit can only be claimed by the branch office, and the proper officer or the adjudicating authority or the audit authority who will be auditing the books of accounts may not be having access to the books of accounts of the ISD and may not assess whether the input tax credit availed or taken and distributed is in excess or not. But this provision has been specified where, considering that 2A or 2B of the branch office, the input tax credit is less, but where the branch office has claimed excess input tax credit when compared to 2A, only in such situation we can say that, okay, it can be concluded that the branch office or the recipient has claimed excess input tax credit. For recovery of such excess claim of input tax credit, there are provisions 73, 74, 74A, which are specified, and accordingly, the excess input tax credit can be recovered. Now, the question that arises is whether there can be any assessment or adjudication that can be undertaken, or the proceedings can be invoked on ISD or not. Whatever may be the distribution of credit by the ISD, though the recipient has an option to not claim or say that it is ineligible, or it is only the ISD, because if you look at the ISD provisions and the returns what has been specified for ISD, it says that credit of eligible taxes should be distributed as eligible taxes, credit of ineligible taxes should be distributed as ineligible taxes. That itself means that the self-assessment will be done by the ISD to identify which are eligible input tax credit and to identify which are ineligible input tax credit, and accordingly, the ISD will decide the amount of input tax credit that needs to be transferred as eligible credit and amount of input tax credit that needs to be transferred as ineligible input tax credit. So it is the self-assessment of the ISD, and the wrong distribution or excess distribution of ineligible input tax credit as eligible input tax credit, how it will be a subject matter of recovery from the recipients or from the ISD, that needs to be seen. But in any case, the proceedings, the assessment proceedings, the provisions relating to section 61, 62, 63, 65, all these can be separately invoked on the ISD, and ISD can also be a subject matter of assessment. It is for the very same reason section 122(19) specifies that if the ISD input tax credit in contravention of section 20 or the rules made thereunder, such ISD shall be liable to pay penalty of which 10,000 or equivalent to tax distributed, whichever is higher. So when we refer to 122(19), that itself means that all these assessment provisions, which are part of the statute, can be separately invoked on the ISD. And if any input tax credit that has been taken and that has been transferred wrongly or in excess or in contravention can be recovered from the ISD also. Section 21 is applicable only in case if there is an apparent excess claim of input tax credit by the recipient. These are the procedures. We will quickly run through the procedures. I think all of us are aware of the procedures, so let us not spend much time on this. ITC available for distribution, the same month it has to be distributed. Input service attributable to one distinct person shall be distributed only to such distinct persons. More than one recipient, then distribution of ITC on pro rata basis in such state or union territory during the relevant period to the aggregate turnover of all such recipients operational in the current year during the relevant period. If you read this 39(1)(d), it uses operational in the current year and it uses relevant period. Let us spend some time on discussing what is this operational unit and how is it applicable to the distribution. So we all know that relevant period as defined under 39(1), the explanation says that, okay, it is the financial year preceding the year for which the credit is to be distributed. If all the recipients of the credits have turnover. So there is a distribution, there is a formula that has been specified, and turnover has to be considered for the purpose of distribution, and such turnover should be of the relevant period. Relevant period for the purpose of this formula is the financial year preceding the year for which the credit is to be distributed. In the case, if any of the recipients do not have turnover in the preceding financial year, the said explanation says that last quarter previous to the month for which the credit is to be distributed needs to be considered. So considering this operational unit and considering this current year and considering this phrase financial year, the distribution of input tax credit, how to distribute the input tax credit becomes very relevant. The said rules specify that ITC shall be distributed to distinct persons which are operational in current year. Therefore, it infers that distinct person operational in preceding financial year and also in current year ITC can be distributed on the basis of turnover of preceding financial year. Distinct person non-operational during the preceding financial year and also during the current financial year, ITC not to be distributed for non-operational distinct person. Distinct person operational in preceding financial year but non-operational in current year, no ITC distribution to such non-operational distinct persons for distribution of credit. The turnover of non-operational distinct person should be excluded. There is yet another category, distinct person not operational during the preceding financial year and operational in the current year. Distribution of ISD can be done on the basis of the last quarter preceding the month of distribution. So there is this confusion relating to use of recipients who are operational in the current year and also the relevant period. So we discussed about that. So operational has not been operational recipient has not been defined under the rules also and under the act. Therefore, one can consider that branch office which are not operational in the current year are not eligible to receive the input tax credit distributed by the ISD, or rather ISD cannot transfer or distribute the credit to the non-operational branches in the current year. So all these are procedures relating to transfer of credit. We have many issues to discuss. We have other issues pertaining to ISD. We will not spend much time on the relevant provisions and all these rules. We will just move on. I'll only highlight the relevant issues which we come across in the relevant provisions. 39(1)(a) is that again enabling provision which is permitting the registered person who is located in the same state, having the same PAN, who is paying the tax on reverse charge basis, and such tax on reverse charge is paid on the common inward supplies or common input services. He can transfer the credit. He can transfer the credit to the ISD. That ISD will in turn transfer the distribute the credit to the respective branches based on the formula as specified under Rule 39(1). We discussed about this 54(1). These are procedural. Certain issues to discuss and consider. Friends, we discussed about the ISD. ISD cannot claim input tax credit. It can only take the credit. It can consider the input tax credit that is available to it and distribute that input tax credit to the respective branches. So this particular fact has to be kept in mind. ISD cannot claim input tax credit. ISD can only take input tax credit. That input tax credit can only be distributed to the branch office. Now there is an issue whether ITC claimed by the recipient, distinct person, can be disallowed without disallowing the ITC in the hands of ISD. Friends, we have seen that ISD has to distribute ITC based on the ratio of turnover of the recipient to the aggregate turnover at the entity level. When the Rule 39(1) is specifying this ratio of the turnover with the aggregate turnover, this itself infers that ISD, under the ISD mechanism, credit will not be distributed at invoice level. Credit will not stand distributed at invoice level. Therefore, the claim of credit by the recipient cannot be correlated with the invoices received by the ISD unless such a review or verification is undertaken on ISD. So ISD will self-assess the input tax credit, eligible, ineligible, and it uses the ratio to distribute the credit. What credit the ISD distribute, the recipient has no choice but to claim the input tax credit. He can not claim the input tax credit. Recipient has to claim the input tax credit distributed by the ISD. He may choose not to claim it, but what is available is eligible for him to claim input tax credit. So the review of the input tax credit has to be undertaken on the ISD. So therefore, one can conclude that unless the ITC is disallowed in the hands of ISD, while we say that ISD can only take the input tax credit and distribute it, cannot claim, but the ISD is supreme, ISD is self-assessing, eligible and ineligible. Therefore, there arises no question of recovery of input tax credit from the recipient unless it is disallowed in the hands of the ISD is one analogy can be drawn. In terms of section 21, excess credit claimed by the recipient in comparison with the credit reflecting in form 2A, 2B can only be recovered under 73, 74, 74A. So therefore, it may be noted that the proceedings, assessment proceedings, if initiated on the recipient, cannot result in disallowance of input tax credit. One can take an argument that, okay, ISD has distributed and I have claimed the input tax credit. Next issue, ITC can be disallowed under section 16(1) in the hands of recipient. As we discussed, ITC relating to common inward supplies of services will stand self-assessed in the hands of ISD, eligibility and ineligibility, and therefore self-assess undertaken by the ISD would suffice to state that ITC claimed by the recipient on account of distribution is eligible and cannot be a subject matter of verification for disallowance under section 16(1). For 17(5), we can apply the same analogy and say that conclude that there cannot be a disallowance of input tax credit distributed by ISD. Who is responsible for making payment to supplier to secure the ITC? Since ISD is only taking the credit and distributing the input tax credit, it is the registered person under the same PAN who will be making the payment, and if such registered person who or the distinct person having the same PAN, if he makes the payment within 180 days, then that itself will satisfy the condition of claim of input tax credit by the ISD and also the recipient. Determination of additional turnover on recipient subsequently in the course of assessment, audit, and inspection. What would be the impact on ITC already stood distributed? So additional turnover is determined on the recipient. We all know that, okay, this input tax credit shall stand distributed based on the turnover of the recipient. What happens if the turnover, self-assessed turnover of the recipient is rejected and there is an additional turnover that has been determined in the course of assessment, audit, and inspection? Friends, in my view, GST is self-assessment regime, and whatever the turnover that stands self-assessed at the time of distribution of the input tax credit will not have any impact subsequently, and that ground cannot be taken to allege that the distribution of input tax credit, what has been undertaken by the ISD, is incorrect. ITC distributed by ISD can be claimed in subsequent tax periods. What are the implications and applicability of time limit specified under section 16(4)? Friends, the recipient may claim the ITC distributed in any of the tax periods subsequent to the tax periods in which the ITC stands distributed by ISD. ISD has a condition to take the input tax credit and distribute in the same month, but the tax so distributed, the recipient can claim the input tax credit in the subsequent month. The restriction specified under section 16(4) is applicable to ITC to be claimed on invoice issued by the supplier of service. However, considering the aspect that ISD is only an office, that ISD provision specifies only the mechanism to distribute credit, services are received and consumed by the recipient, there may arise a dispute that the time limit specified under section 16(4) is applicable to ITC distributed by ISD. So while we are reading it as taking and distribution, there can all these provisions relating to claim of input tax credit or conditions that are specified with respect to claim of input tax credit can be made applicable by the tax authorities, and then eventually may deny the input tax credit taken by the ISD and distributed by the ISD. In any case, when the input tax credit stands distributed, it is the recipient who can claim it in the same month. He can also claim it in the subsequent month. Whether obtaining ISD registration and distribution of credit was mandatory with effect from July 1, 2017. The provisions relating to ISD 261, 21, 20 were existing then also. With this issue, one can recall the clarification that were given wide circular number 199. Circular number 199 gave an option to the head office to distribute the credit or cross-charge the value and taxes to the respective branches. ISD provisions were applicable from July 1, 2017, and ITC distribution mechanism was also available prior to April 1, 2025. But the then existing provisions were not specifying the mechanism to transfer the credit by the registered person to the ISD, which in turn can distribute the input tax credit to the various branches. So it is for such reasons, Circular 199 has made a reference saying that, okay, there are no enabling provisions under the existing ISD provisions. Therefore, it is an option given to the input head office to choose whether they want to cross-charge route, or they may also use ISD mechanism to distribute the input tax credit. Rule 39(1)(e) specifies that the credit should also be transferred to unregistered distinct person, whether the distinct person located in other states can remain unregistered. Rule 39(1)(e) specifies that the credit should also be transferred to unregistered persons. If we refer section 22, subsection 1, it specifies twin conditions for every supplier to obtain registration in a particular state. State from where he makes a taxable supply, states from where he makes a taxable supply of goods or services, or both, or if the aggregate turnover of that registered person is exceeding 20 lakhs. When these two twin conditions are said to have been satisfied in, say, one location in the state of Karnataka, there may not arise a situation to say that Tamil Nadu is not liable to take registration. The first situation that would arise for not obtaining there may still arise a situation. First situation that would arise for not obtaining registration is that the said supplier would not be effecting taxable supply. In such a scenario, it can be inferred that the said distinct person would be consuming the common input services and would not be effecting taxable supplies. This could be a far-fetched thought considering the provisions of 25(4) distinct person, para 2, schedule 1. All these provisions, if we invoke against that unregistered distinct person located in Tamil Nadu, then there may not arise a situation that that distinct person may not be effecting any taxable supplies. So therefore, despite all these provisions, Rule 39(1)(e) mentions that the input tax credit should also stand distributed to the unregistered distinct person, and accordingly the turnover of unregistered distinct person, if any, although he is not registered, should also be considered for the purpose of distribution of credit. ISD mechanism and impact on place of supply provisions. Friends, we discussed about this particular issue relating to place of supply, how crucial is place of supply, what is contract supply and all, how can there be a tax invoice on head office. So we have discussed ISD mechanism and impact on place of supply provisions. ISD can still receive the tax invoice and also receive the services. There cannot be a contract. There can be a contract that ISD will say, okay, you render the services to me, you also issue the tax invoices to me, which I will take, and then I will distribute the credit. This contract is possible. So all these issues can be considered for the purpose of considering while considering to take the registration under ISD. Bill to ship to for supply of services is possible instead of ISD. In my view, bill to ship to for supply of services is possible, but there are issues relating to bill to ship to supply of services. For example, if the supplier is located in Tamil Nadu, my branch office is located in Tamil Nadu, and head office is located in Bangalore, I can ask the supplier in Tamil Nadu to supply the services to branch office located in Tamil Nadu and issue the tax invoice on me. In such a situation, the supplier will charge CGST and SGST, and the state code will be 33 and the invoice code will be 29. And therefore, the portal by default, I think it shows ineligible input tax credit and will stand auto-populated in 3B. So there are such issues, but these issues needs to be addressed when we draw a contract for bill to ship to supply of services with our suppliers. Is it mandatory that tax invoice should be received by ISD and the services should be received by the distinct person? We discussed about this. Yes, it is. It is only in such of those situations the distribution of input tax credit, the question of distributing the input tax credit will arise. Importance of contract and impact on place of supply, we discussed about this. Tax paid on RCM basis on common inward supplies can only be distributed through ISD. We discussed about 39(1)(a), we discussed about 54(1)(a). So these provisions are enabling provisions which are also including or within their ambit, the taxes paid on RCM basis to stand transferred by the registered person to the ISD and who in turn can distribute the input tax credit. Tax paid on RCM basis, issues relating to incorrect reporting of invoice by suppliers on distinct person instead of ISD. Issues relating to incorrect reporting of invoice by the supplier on distinct person instead of ISD. Incorrect issuance of, generally there should not arise such an instance because incorrect issuance of invoice on distinct person represent the false supplies. So therefore the invoice issued is incorrect. Therefore, considering the conditions specified under section 16 of the Act, the supplier has to report the invoice on ISD by cancelling the invoice reported on GST number of the ISD. It would be incorrect to, if the supplier is not rectifying and the ISD takes that incorrect input tax credit and then distribute the input tax credit, in my view, it will be incorrect distribution and therefore will not satisfy the conditions, other conditions specified under the law. And therefore, the recipient should go back to the supplier, intimate him about the wrong reporting of the invoice on the distinct person instead of ISD and get it rectified. Issues relating to incorrect reporting of invoice by suppliers on ISD instead of distinct person, the recipient has to follow the same process. Whether the assessment or audit or inspection proceedings invoked on branch offices can be extended on to ISD. Friends, we all know that ISD is a separate registration. It is a distinct person and a separate registration. For invoking or initiating any proceedings of assessment, audit or inspection under GST law, depending on the type of assessment that is being initiated, there are various approvals and authorization that needs to be taken by the proper officer. If it is 61, 62, 63, circular number 3 assigns the proper officer. So the same proper officer, the proper officer assigned by that circular is the proper officer of the branch who has that jurisdiction over the branch offices will be different or may also be the same as that of ISD. But consider the situation where audit has to be undertaken and there is an authorization or assignment that is required, or where there is an authorization required by the Joint Commission in case of section 67. Because these ISD is a separate registration, the authorizations and approvals received for the purpose of case-specific assessment or inspection cannot be considered for the purpose of invoking assessment proceedings or audit proceedings or inspection. And and all these proceedings should stand initiated separately on ISD, and the same proceedings cannot stand extended to ISD is one view. Multiple ISDs possible in different states and in same state. Answer is yes, but the purpose for obtaining the ISD in different states becomes a question. It only gives an indication that the business structure or business mechanisms needs to be revisited, because there cannot be a situation where where a registered person may have input service distributor registration in every state where he has a branch. issues arising out of circulars 199 and 210. We discussed about circular number 199 and 210. Circular 199 has clarified and given us an option. Circular 199, there is an interpretation that circular 199 is giving us an option, is specifying to cross-charge only internally generated services, whereas third-party common input services received by the registered person may not be subject matter of cross-charge to the distinct person, or the credit can be distributed by ISD mechanism. Internally generated services are liable for cross-charge. Third-party common input services may be cross-charged to distinct person, or the credit can be distributed by ISD mechanism. This appears to be in contradiction with the clarification issued by circular number 210, where circular number 210 is clarifying that if a registered person who has the branches located outside India, or who receives the services from the branches located outside India, who receives the services from the related person located outside India, who receives services from the affiliates located outside India, is not liable to pay tax on reverse charge basis in the event such registered person is eligible to claim full input tax credit. Reading this 199 is applicable only to cross-charge. Reading this 199, the cross-charge is only applicable to internally generated invoice, may not fall in line with the clarification what has been issued under circular number 210. Internally generated services and also all other services may still go as a cross-charge, subject to the satisfaction of conditions subject to satisfaction of other conditions when and the situations where the ISD is applicable. So there is some conflict between the clarification given by circular number 199 and 210. So this is the point what I was trying to bring out. Distribution of ITC to SEZ units, claim and utilization related SEZ. If the registered person has branches located in SEZ, then common input services received by the head office, the input tax credit should also be distributed to SEZ. SEZ can claim the input tax credit and utilize it for DTA supplies, or they may go for claiming of refund of unutilized input tax credit. Section 21 specifies that the excess ITC distributed shall be recoverable from recipient branch. Whether this provision is applicable only to recover excess ITC distributed, we discussed about this. We'll move on to next issue. E-invoicing, whether applicable to ISD? Answer is no. There is a FAQ which also says that e-invoicing is not applicable. ISD is not a supplier of goods or services. ISD is only a distributor of input tax credit. Whether e-invoicing provisions are applicable to distinct person to transfer ITC? Answer is again no, because it is the invoice issued by the distinct person to transfer ITC under Rule 54(1)(a). Under Rule 54(1)(a) is only to distribute the input tax credit, and it is not an invoice for supply of goods or services. Issues relating to cross-charge of inward supplies vis-a-vis ISD. Friends, these are few of the issues relating to ISD which came to my mind. I have not taken illustrations or examples pertaining to which kind of input services would qualify for the purpose of distribution. I have not taken any example for the reason that all these illustrations will be subject matter of will be very subjective. We should consider all the facts and circumstances to decide whether it is a common input services, whether it is the common inward supply of services, and whether is it a situation where tax invoice can be issued on the ISD and the service can be supplied on the branch offices. So these are few of the issues. Now I will pause for a moment and I will ask if any of the members have any question to discuss, or if we can consider any of the issues to discuss. And if I am not clear on any of these issues, they may ask a question so that we can continue with our discussion. Of course, these are the issues. And last one issue to discuss is provisions of section 155, either applicable on ISD or distinct person. Section 155 specifies the burden of proof to be discharged by the person who claims the input tax credit. It may be noted that the ISD cannot claim the ITC is what we discussed. ISD can only take the credit and distribute the input tax credit. Reference can be drawn from the table number 3 of GSTR 6, which mentions that ITC received for distribution. That ITC received for distribution should be meant for further distribution to branch office. Accordingly, it can be inferred that the ISD cannot claim ITC and it can only consider ITC for the purpose of distribution, while the distinct person will claim the ITC distributed by ISD. Therefore, we can say that 155 is applicable to distinct person who claims the ITC distributed by ISD. However, for administrative purposes, provisions of section 155 may be made applicable on ISD, since the ISD which will have to assess the eligible and ineligible input tax credit for the distribution. So 155 for the purpose of administration can be invoked against the ISD which takes the credits and distributes the credits.
Got it.
Thank you, Karnataka State Chartered Accountants Association and all the delegates who participated in this webinar. And thank you for giving me this opportunity. Thank you, Rahul. Thank you, Sachin. Thank you, one and all.
Thank you. On behalf of KSCAA, I would like to thank Kuber Hundekar sir for taking out his precious time and enlightening us with respect to ISD, its practical implementation challenges, and the foresight how we can handle or look into the aspects of this ISD. I would like to thank all the participants for joining us. One quick info for all the participants who have joined. In the coming month, we are planning to have custom series, wherein on first will be on June 8th, followed by June 18th, and on June 26th, we have GST Appellate Tribunal ka session. So plan your calendars accordingly. We'll be rolling out the schedule to you soon. Thank you, everyone. Have a great weekend. Bye-bye.
Thank you. Thank you.